Good morning, everyone, and welcome to the Sunbird Effects Market Madness webinar. Today's subject will be on the stochastic RSI. I'm going to explain a bit what the stochastic RSI is. We're going to review small things on our previous webinars, and we're going to continue with the stochastic, and we're going to analyze it on current market. Okay. Okay, so first of all, what we're going to do is that we're going to have a small review of our previous course. Now, I'm just going to remind you, I'm going to have two sections. On every two sections of questions, I'm going to stop in the middle. I'm going to give you 5 to 10 minutes to ask questions, and then at the end of the webinar, I'm going to give you again 5 to 10 minutes to ask questions, and then we're going to end the webinar. Okay. Sorry. Okay, so let's have a small review of the course, of the previous course. We spoke about Bollinger bands. Again, Bollinger bands varies widely among traders. Price touches the lower band, buy. Price touches the upper band, sell. You exit, meaning stop loss, when price reaches moving average. Price touches the lower band, price touches upper band, sell and buy. It's the same thing. You have two choices, all right? Just a small review of our previous course. If you need more information, if you need to review the full course, you can go to our Sunbird page, Education, Webinars, Market Madness, and the course of Bollinger Bands. Okay, so continuing on our review, we have two strategies, the SBB strategy and the TBB strategy. The SBB strategy is the simple Bollinger Band strategy. Just to make sure that you guys have the two strategies. First of all, what we need to do is that we need to set up the Bollinger Band at the following parameters, at average 20, standard deviation 2, and then we're going to set up a tangent line on the bands, and then we're going to have our expectations, meaning that if current market breaks lower band, it was oversold, so we buy. If current market breaks upper band, it was overbought, sell. So we need to sell. And then we're going to assign pending orders. Take profit will be at our moving average, and stop loss will be at 20 to 25 pips. Okay, and then we have again our tight Bollinger Band strategy. Let's have a small review of what the tight Bollinger Band strategy is. Basically, this strategy works on stable market, meaning that the market has to be very tight, meaning that it shows only one line. It doesn't have any volatility in it. We're gonna have once we see that it's very stable. Okay, we're gonna have a small review of it. Let's check it out on our current market. There was a time on the Euro US dollar when it was very, very stable. We're gonna have a small look. Okay, basically somewhere here. Okay, or even better, I prefer opening up our famous Euro CHF. Let's have a look on our famous Euro CHF. Just to give you an idea of how we need to analyze this TBB, the tight Bollinger Band strategy. Oops, sorry. Okay, here you go. This, as you can see here, is a stable market. Okay. So, moving forward, it works on a stable market. All right, we need to set up our lines. Okay. Now, let's check our TBB strategy. All right, we need to find tight and stable market using the Bollinger Bands. with average of 20 and 2 as deviation. So that's what we're going to do here. Just making sure very quickly. 22 add, okay. Next, assign the volume. Let's put the volume in. Where can we find the volume? Here we go. Okay, so we have the volume here. Let's zoom in a bit. Oh, this is good. Next, let's move forward. Set up our fake out line once appeared. What's a fake out line? A fake out line is when we see that we learned that in Bollinger bands, when the two Bollinger bands are very tight together, especially on the stable market, there will be a fake out, meaning that we're expecting the market to be very strong, like this one. Okay, every time that you see that the Bollinger bands are very tight and are following the market, it means that it will have a breakout in the market, and it's going to be on the long position. Okay, so a fake out is when it goes up and then it goes back down. This is our fake out. So we're going to put a line very quickly. Okay, I don't want to put anything too special like last time on this Bollinger Bands, because this is not our course. This is our fake out line. Okay. Once appeared. Look if volume went for a small blast off. Okay, let's see. Here, the volume went on a small blast off. Okay, good. This is our fake out. If volume made a huge break, moving average will direct the way. Oh, of course, we need to put our moving average. Okay, moving average. Here we go. Let's put it in yellow. Okay. Okay, perfect. So this is our moving average. After it breaked out, as you can see this line here, the volume, and we have our fake out, the moving average took its course. Once it takes its course, you know what position to take. Now the thing is that you don't want to risk anything, all right? You want to lower your risks. What you do is that since there was a line and went back down, all right, you're going to wait until it reaches that line again. Once it reaches that line again, you can rest assured that the moving average took its course. You can open a long position, and you're going to get into profits like you never saw before. Okay, so this is the Bollinger Band. Okay, let's start our course with the Stochastic RSI. Okay, I'm just going to read it because it's very simple and nothing to explain in other words. The Stochastic RSI combines two very popular technical analysis indicators, stochastic and the relative strength index. Whereas stochastic and RSI are based off of price, stochastic RSI derives its value from the relative strength index. It is basically the stochastic indicator applied to the RSI indicator. The stochastic RSI gives more profitable buy and sell signals and overbought and oversold readings than the relative strength index. Okay, basically, let's see. I want to put the stochastic RSI. You're going to see on your MetaTrader the stochastic RSI, so nothing to worry about. It's basically two small lines. Okay, let's put our studies. Okay, here we go. Stochastic RSI. We're going to put it in blue and red. Okay. Basically, it's 14 and 3. Normally, you can change the period depending on the strategy that you want to use. To be honest with you, I personally do not use the stochastic RSI. I do not use strategies based on the stochastic RSI. I use the stochastic RSI to confirm and make my analysis better, to know how to trade, to know if my trade is going to be either good or bad, and I'll tell you how. Okay, so we're going to add the stochastic RSI. This course is very good because we're going to do everything on a current market, meaning that the euro right now at this moment, okay, it's at 1.29220. Okay, I'm going to analyze with you guys the stochastic RSI, and we're going to know exactly what to do. Okay. The stochastic RSI was developed by Tusher as Chand and Stanley Kroll and describes their 1994 book, The New Technical Trader. All right, for those who want to read it. Okay, basically it's very simple. I'm just going to tell you exactly on how to analyze this. This is a very small. It doesn't take an hour for this webinar, but it's great. Okay, because we're going to analyze everything at once. Basically, my main goal is to put all three indicators that I'm going to teach you into one chart, so that when you're going to have, like, for example, your trading plan and you chose your currency, you will know exactly that your three indicators state something, and you can follow your three indicators, and you can have sure positions. Okay, so after I'm done with this, I'm going to give 5 to 10 minutes to ask questions, and then I'm going to go to a strategy with the stochastic RSI. Okay, this could help. This is something that's great also. So yeah, so basically, let's check it out. Okay, so we see that here, okay, the euro US dollar made a full downward move. Okay, what you need to know is for the stochastic RSI, there are two things. Okay, we need to put two lines. Let's put a line. We need to put a line on 80, and we need to put a line on 20. Most traders, what they do is that they put a line on 70 and they put a line on 30. Okay, but normally it's 80 and 20, but we're going to follow the traders. Okay, and I'm going to tell you exactly on how the stochastic RSI works. Okay, it's very simple. Okay, we need to follow and try to keep up here. I'm just going to make this, oops, sorry. I'm just going to make this bigger because this is the main graph that I want you to look at. Basically, we need to follow both lines. This line, the red and the blue, okay? Now, when we see that both lines pass through the 70, it means that the market was overbought, okay? Exactly like the Bollinger Bands, when it's overbought, you're looking to sell. So basically, when we see that it was overbought, it passed through the 70% line, it's going to go back down. This is exactly what it did. Once it went back down, it went below 30. Once it reaches below 30, it means that it was oversold. So we're looking to buy. Now, some cases, you're going to see that it could continue to be very, that it could reach even zero. All right. Once it reaches zero, you can rest assured that it's going to continue to go down. But there will be a point where it's going to make a breakout. So let's say on the current market. Right now, what happened is that here, now let's put it, oops, my bad again. Okay, here we go. Now let's look at the market, and let's look at what we have here. Okay. The market was going upward. Okay, once it reaches this, and as you can see, the stochastic RSI is still on, it's still over 70. It broke 70. So we see that it was overbought. So we're looking to sell. Okay, once we know that it's looking to sell, we need to know when to open the position. So if we're looking to sell, we're selling. Let's say we're selling, market goes back down. Once market goes back down, it passed through 30, even reached the zero. Okay, sometimes it can reach zero for a long time. Once it reaches zero, you're looking to buy. So you're buying. Once you're opening a position on buy, it's going to go back up until it breaks that 70, and you're looking to sell. it goes upward and downward. Okay, these are you can make use of it on knowing when to open a position. Okay, now when to open a position, let's say for example here, okay, on this graph, okay, this downward, I'm just going to make sure that everybody can see. Here you go. Now I'm looking at this chart, this line. Now this line refers to this line. Okay, it went back down. Okay, now that it went back down, it's looking to go up. Now the question is when to open a position. Preferably, I would open a position once I see that both lines, okay, remember, we need to make sure that there are both lines. Okay, when both lines crosses through 30, I prefer to buy. Okay, I prefer to buy and to close my position between 70 and 85. Now this is for opening very small. You can make like 4 pips, but if you open a big position, 4 pips could be, for example, like $50. But it's very quick and simple. Now I'm not using it for that. I'm using it for many other things to analyze my market better. Okay, now how do we do that? Let's make it happen. Let's analyze from what we learned in our previous sessions how to analyze the market so that your position will be much more clear. You need to understand, okay? What we have learned up until now, it's to open only one position, imagine. But one position that will benefit you and can make you tons of money. That's the main idea, okay? Now, what I want to do, I want to put every indicator that we have learned up until today and see what my analysis could be. Okay. Now, I'm only talking technical. All right. If I'm talking fundamental, which will be our not our next course, the course after that, we're going to start talking about fundamental and how to apply all strategies together in one chart. Okay. So basically, what I need to do, let's say I'm taking off. Okay. I just opened my chart right now. Okay. What's today? Today's the 14th. Okay. Let's put a line on the 14th. All right. Let's put it in green so we can see clearly. Okay. Now, let's say I'm not going to do on a 1 hour frame. I'm going to make on a 30-minute frame. Okay. Now, you guys remember the basics? What are the basics? Let's put my resistance and my support. Okay. So if it passes through the resistance, I can buy, and if it passes through support, I can sell, right? Okay, perfect. Again, also need to put my average. Average, I'm not making calculation at the moment because it's going to take a lot of time, and I don't want to waste your time, and I want to make your time precious. Okay, so let's say between here and there. Okay, so I have like my resistance, my support, and my average. Now, if it passes through resistance, I buy. If it passes through support, I sell. Now, next, what I have to do. I'm not going to put average 2 and average 3. Why? Because let's say it's the beginning of the day and we're not seeing a lot of movement in the market. We only see from here till here. Okay, remember it's on the 30-minute chart also, so it's different. Okay, so I have, let's say I'm putting a penny order here and I'm putting a penny order, I wouldn't say here because it could go back down and it could break several support levels. But resistance level, I can rest assured that if it goes back up and it breaks the resistance, I can buy, I can go on buy. So I'm going to put a penny order here on buy. Okay, next. Let's put our Bollinger Bands. Okay, now what did we say before with our Bollinger Bands? When they're tight, it means that we're looking on a buy position. When they're far apart, we're looking at a sell position. As you can see here, they are far apart. So we were looking on a sell position. Some traders do not know, even if it went down, they don't know if what position they're looking. But now that you know that if we see that the Bollinger Bands are far apart, we're looking on a sell position. Okay, so what's my Bollinger Band stating? Right now it's getting far apart, okay? So I'm looking on a sell position. Okay, so my Bollinger Band indicates that I'm looking on a sell position. Next, what's my stochastic RSI telling me? Thank you. Okay, let's put my lines, like we said before. On 70. And on 30. Okay. My stochastic RSI is telling me that we're still looking on a sell position. So what position should I take? I should take sell. All right. So both indicators are showing me that I'm looking on a sell position. After that, I can make my strategy. Okay. This is how we perfectly analyze in a technical way the movement of the market. Okay. Now we're going to go back. I'm going to give 5 to 10 minutes to ask questions. We're going to go back and first of all, go ahead, ask the questions, and feel free, and I'll gladly answer. So I'm going to give 5 to 10 minutes starting now. Okay, we have a question here. You mentioned that the stochastic is showing a sell. It should be buy. Well, here's the thing. Okay, the buy the buy position, it is better because the thing is that you don't want to risk anything. Okay, you could tell yourself, okay, it was oversold. Now I'm looking on a buy position. What did I say before? If you're looking at a buy position, you should buy once it passes through 30. At the moment, it's not going back up. When it's going back up, it means that it's raising, it's getting stronger. At the moment, you see that these two lines, okay, are going on a downward. They're going downward. So meaning that the market is getting weaker. So the market is falling. The euro US dollar is falling. So basically, I'm looking on a sell up until, if you can see here on this point, all right, it was going on a sell position and then it went back up. Once you see that it's going back up, then you can tell me that you can open a buy position. And when to open the position? Once it breaks through the 30. Very simple. Very basic, very simple, very efficient. It's not going to make a lot of pips, Depending on the amount of money that you're opening your position with, it will. We have another question. Stochastic RSI isn't the same for the as the RSI. No, because the stochastic RSI is the stochastic oscillator and the RSI at the same time. Okay, the strategy that I'm going to show you will be the stochastic, all right, apart and the RSI apart. So nothing to worry about. The stochastic RSI is not completely different, but both stochastic and RSI at once. I'm going to give 3 more minutes to ask questions. Feel free. Okay, let's move forward. Okay, so for now, we learned exactly how to analyze it. Okay, we're going to learn how to open a position later on. But first, as I promised, these webinars are for strategies as well. I'm going to provide you with a small strategy for the stochastic and the RSI. They're going to be apart, but we're going to use them together. All right. This might not work for the current market right now, but it will work for several other markets. Okay. Now, please do not ask questions right now. I want all of you to make sure that you're following this. You're following me on this strategy because it's a tiny bit complicated, but it's worth it. Okay. What we're going to do is that we're going to make a strategy for the stochastic RSI. Okay, I personally call it STRSI. It's a very it's worth it. All right, it's not a personal strategy that I built. It's a strategy that you can also find on the internet, but with different setup material. Okay, so the currency price that you can set up your the currency price is any. All right, you can put it on any currency price. Time frame as well, any time frame. Now indicators RSI and stochastic. Okay, so let's make it happen. All right, so let's take the euro US dollar right now. Let's see what's going on. I want to put studies stochastic. We said 14 with levels of 70 and 30. Okay, stochastic. We're gonna make full stochastic full stochastic. Oh, sorry. No, RSI. My bad. RSI 14. Normal RSI 14. Green. Perfect. Okay. And we're going to put stochastic, which is full. You're going to see a few stochastic options. Stochastic 1133. All right, let's put another study. 1133. All right. Okay. Okay. Here's my setup. This is how the setup should be. Okay. Now, right now, we want to know when to buy and when to sell. Okay. Long position. When to buy. If RSI crosses below 30. Oh, sorry. Let's put on our RSI. I forgot the 70 and 30. All right. Let's make it. Let's put it. And 30. Okay. If RSI crosses below 30, made his bottom, and then crossed back through 30, all right, I'm opening a position. And the stochastic has to be higher than 50. All right, so let's put our 50. Forgot to put 50. Okay. Okay, so basically it tells me this is the strategy. If the RSI crosses 30 here and reached its bottom and goes back up and crosses back 30, I'm looking on a buy position. But at the same time, it has to be, again, what did we say? Stochastic has to be higher than 50. Stochastic is not higher than 50, so I'm not looking into a buy position already. Let's see on the sell position. Okay, short position sell. If RSI crosses above 70, formed the peak, crossed back through 70. All right, let's see the RSI. Went through 70. Okay, went through 70 here, but right now it's not going through 70. Okay, and stochastic is lower than 50. Okay, so one of these conditions is applied. Okay, but let's see here. If we can see here, this strategy works perfectly. Okay, because it will reassure your position. If, like we said, we're looking on a sell position right now, right? But we know that it was on the sell. Okay, first of all, RSI crossed 70 and then went back down. At the same time, the stochastic oscillator was above 50. So both conditions apply. You can open a sell position as soon as you want. All right, you can even put alerts or even pending orders on these RSI and stochastic. But we can see that this strategy actually works. At the moment, here, nothing applies. Why? Because it neither reached 30 or 70. So I want to meet at least one of these conditions, and this condition will apply to these conditions, and then I can open my position. Basically, this is the strategy. Okay, so let's say we know that this is the RSI strategy. Now we need to know when to close our positions. Basically, okay, I referred here, if you want, um, the strategy, basically the same strategy that I'm looking. All right. If some of you want more strategies, you can verify things. Okay. So basically, when do we need to exit? All right. Whether it's take profit or stop loss, basically I would consider 25 pips stop loss and 25 pips take profit. When it's something like that, all right, you can look on the long term. So basically that's that. Oh, sorry. So from what we have learned, all right, the stochastic oscillator shows us a direction. Okay, shows us a direction. It tells us exactly when is the moment that I should open my position. Let's say I'm taking everything off. Okay, I'm taking everything off. Okay. Again, I'm putting a line at, whoops. I'm putting a line here. All right, resistance and support. Remember, always good. Putting my studies. Okay, I'm putting my lines here. It's not accurate, but just showing you on how it works right now. Okay, let's put my high and low. Resistance, my support. Okay, so I have my resistance and support. Right now, we don't know what's happening. Right now, it's looking on a downward trend. So I'm looking on a sell position, basically. Why? Because if we looked on what we have learned with the Bollinger Bands as well, okay, the Bollinger Bands are far apart, so I'm looking on a sell position because when they're far apart, I'm looking on selling. When they're close to get, when they're close, I'm looking on a buy. So my first condition is that the Bollinger Bands are being far apart. Second of all, I'm looking that my stochastic RSI is going on a downward. So what am I looking at? I'm looking at a sell position. Okay, I could have looked on a sell position here, somewhere around here. Why? Because it passed through and it's making its peak. Here's the peak, back down. All right, this is a small fake out, but again, one of these conditions are applied. Now, in our next course, we're going to learn exactly on if let's say we're going to have three indicators from where two of these indicators shows us a direction of the position, what to do. All right. After I'm done with the third indicator next week, I'm going to put everything together. And with that, I'm going to learn exactly what to do. All right. Now, remember, this is technical analysis and strategies. All right. I know that it's not. It was a very quick webinar though. It was 40 minutes. But there's nothing else to know about the stochastic RSI or the stochastic oscillator or the RSI itself. Basically, it shows us when to open a position. It shows us what it's doing and when to open a position. That's why it's one of the most famous and best indicators in the market right now. Okay. So again, if you guys want to open a position, I would suggest to open a position. I'll open a position. I would have suggested opening a position here and closing about. If it reaches -5, it has to reach 0. By the way, once it reaches 0, and that you see that, for example, we don't know what it's doing. Personally, I would close around here, around the resistance, the support. Sorry. Okay, but again, you can analyze any way you want. If you need more information, if you need more analysis from me, from any other currency, okay, feel free to ask any questions. You all have my email, right? You can also open an account with me, which is best. I can personally guide you to every strategy that I've taught you. Everything else, if you need any bonuses, remember I'm here to help. You can open an account at sunbirdeffects.com. Your referral code to be directed to me personally would be 1090. Okay, once you enter the code, send me an email, I'll reply, I'll call you, we'll make sure that everything is set up for you. I'll make your profit happen one way or another. All right, that's why I'm here. This is my job. Okay, you're going to have a personal session with me. I'm also going to offer you a 100% bonus with a minimum of $2,000 deposit or more. You're going to get our Forex signals, whether it's on email, and I can put you through SMS. And you're going to be part of my Market Madness group Skype. Basically, it's a Skype group where I give the latest news of the market. So this is basically the webinar. I'm just going to give another 5 minutes to ask questions. Feel free. Okay, we have a few questions here. Can I please repeat the strategy? Oh, come on. Here's the thing. I'm gonna upload the strategy directly to the website. All right, as soon as I finish recording this, and I'm gonna put it there. If you can send me an email on adam.williams.fx@gmail.com. I'm just gonna write it down for all of you, for those who need it. .williams.fx@gmail.com. Okay, you can send me an email here, and I'll reply. I'll provide you with all the strategy. Okay, so nothing to worry about. If it's one webinar, it's going to be recorded and put back to the website. Okay. We have another question from D chart. D price is at support at 1.29180. Overthrew the stock and RSI below. It's below 30. Still want to open a sell position. Okay, so we have a question here from D chart. Okay, so there's a price that supports at 1.29180. Even though the stochastic oscillator and RSI is below 30, still want to open a sell position. Well, basically, let me tell you the truth. If you're using this strategy, I would highly consider not to open any positions if the two conditions are not applied. Okay, if you want to analyze, for analysis, that's why I made it on a current market. If you want to make an analysis, yes, you're looking on a sell position. The only problem here is that you don't know if, let's say, you were applying the strategy right now, you wouldn't make any profit right now. Because what? Because you're open a sell position, and right now it's going back up. Why? I can state minimum 100 reasons why. All right, this basically it's fundamental. At this stage, it's fundamental. That's what we're going to learn in about 2 to 3 weeks. We're going to learn that. Okay, we're going to learn how to analyze everything, how to know exactly when to open a position. Okay, but at the moment, those two conditions do not apply. Okay. We have a good question for the bonus. Well, should it be a new account to profit from the bonus, or existing customer can profit from it? Existing customers can profit from it as long. Well, basically, it's for new clients. For those who want to register with me, what you need to do is that if you're an existing client and you're with me, what you need to do is very simple. If you have less than $500, something like that, and you want to put more and you want to benefit from the bonus at a minimum of $2,000, yeah, I'll make a special exception for you. Okay, gonna give one more minute. All right, we're gonna finish here. Hope you all had a wonderful webinar. Sorry. If you need anything, you can send me a private email, like I put it on chat. If you need anything, whatever you need, even if you're with another broker, I would be more than happy to help. Feel free to ask me any questions. Thank you for coming. All right, it was a great webinar, and have a wonderful day or evening or morning even. Thank you very much.